Guys, welcome to the channel. Today's video is going to be all about the real price trends here in the greater Denver metro area when it comes to real estate. See, the reality is the headlines you guys are seeing and what a lot of agents are seeing is just misleading. It's not the full picture. And until you're on a video like this or have the insight that we're going to provide you today, you guys could be seeing one thing and the reality of the situation is completely different. And so we're going to break it down in a very simplistic way so you can see what actually is happening in regard to price trends here in Denver, Colorado. And then we're also going to give a little bit of forecasting of what you can expect in the next 6 months here in 2025. So with that, guys, we just want to encourage, if you guys have real estate needs, you're moving to Colorado, you're selling in Colorado or investing, we are licensed real estate agents. And by we, I mean myself and my team, and we'd love nothing more to support you. So please pick up the phone and call us. I will put my number in the chat. You can book a call down below in the description, and we'd love nothing more to serve you guys in your real estate needs. So as much as we love doing this video, we love serving you guys more. Now, with that, let's get into the real pricing trends here in Colorado. I've got a report I'm going to break down for you guys so that you can understand what's actually happening in today's market. And let me share my screen here. That way we can follow along the market brief. All right. So let me make sure we add this to the stage. Perfect. We're not going to start with a conclusion. Sorry. We're going to go through this. So what's really cool about this is we have this nicely breaking down in a way you guys can understand. And not only am I going to kind of read the report, but I'm going to give you my thoughts as we go through this. So I promise I'm not just going to read this line by line and give you a boring synopsis of the report. You can read it yourself. I'm going to give some entertainment value in regard to giving you some thoughts behind this. And the cool thing is I'm boots on the ground, guys. I'm in the market every single day. And so we're going to push this report up against what I'm actually seeing in the market to give you guys real live time insights of the market. So the real story behind home prices in today's market. Recent headlines continue to highlight elevated and even rising average sales price across the Denver metro area. Charts show a clear upward trend since early February, with last week marking the 5th highest average sold price on record at $731. What we're talking about is this line right here. Can you guys see that? That right there, the tannish line, is what we're talking about, the 731. While prices rising through June are seasonally typical, in this case, the data can be misleading for both buyers and sellers. A closer look at the types of homes being sold tells more of a nuanced story. What's driving the average price upward isn't broad-based appreciation. It's the composition of what's selling. Larger, more expensive homes are making up a bigger share of recent transactions, skewing the average price higher. Meanwhile, the price per square foot across the region has declined to its lowest level for the first time of the year since 2021. So guys, like, that's it. I could be done with the video. And like, this is what I mean by the real price trend. It can be very misleading looking at this chart and saying, oh gosh, look at price. Like, we're doing pretty well. Not only are we pacing the market here, but we also hit a all-time high here. But the reality is, when you have this conglomeration of bigger homes, homes that are in a higher price point selling, it's going to bring the whole market with it. But the reality is that that's not the most accurate way of viewing the market and seeing what price trends are doing. And as you can see here, pricing at this point is lower than it was 2024, 2023, and 2022. So all of those folks who bought in the last 3 years, I shouldn't say all, but a good percentage of those people who bought over the last 3 years are finding themselves having to sell their home for less than they bought it for. Guys, short sales are on the rise. I haven't looked at the most recent foreclosure numbers, but yeah, I mean, we're definitely in a market where we're starting to see sellers who have bought in 2022, 2023, some in 2021, They're coming back and needing to sell their home, and they just can't sell it for what they bought it for. For sellers, assuming prices are climbing can lead to overpricing and underpreparing a home for market. Two of the most common and costly missteps. Guys, can I shout this from the roof? This is so important. If you are not understanding the market at the level we're explaining it to you today, or your real estate agent isn't, it's so dangerous in regard to you selling for less money than you could have if you prepared the property correctly and price accurately to the market. It's so important that you get the data right so that you can build the strategy correctly and ensure your pricing accurate to today's market. For buyers, this perception may create unnecessary urgency or lead to overpaying. That's happening too, guys. Understanding the real story behind pricing trends is critical for both sides of the transaction. Now, some of you may ask, why? Why is pricing doing what it's doing? Well, let's get into it. An interesting inventory trend. So the reason price is trending down is because inventory has been trending up and up and up. I don't have the graph. Yeah, right here. You can see the clear gap in inventory. We talk about this on the channel all the time. And guys, I have people calling me about the market, about buying here, about selling here. And so just another encouragement, if you guys are actually active in today's market and you want to know more about how this affects your personal situation, feel free to pick up the phone and call. Numbers in the comments, a link to book a call is down below. So let's get into something that is, from my perspective, quite promising in today's market. An interesting inventory trend. This is something we've been anticipating and talking about for over a month now. The possibility that some sellers, recognizing the market is tougher than expected, might choose not to list at all. If that happens, we'd expect inventory growth to slow down, which from my perspective is healthy, even during the peak summer months. That's exactly what we're starting to see. In five of the last 7 weeks and 6 of the last 9, the number of new listings has declined from a high of 1,800 homes a week hitting the market in late April. Last week brought 1,200 new listings. Guys, let me put this in perspective for you, okay? When we were in COVID markets, when home prices were just absurd, and you had buyers paying $100,000 over asking, like, we had roughly 18 to 2,500 homes on the market, period. What this article is saying is we have that many homes that came on the market for sale in 1 week. So just to give you some context there. At the same time, more frustrated sellers are pulling their home off the market. Last week alone, 265 sellers called it quits, a number only outpaced once in December 2024 and not seen consistently since the early days of the COVID pandemic. This is what we're talking about. Sellers that put their house on the market and took it off, a record over the last 5 years. That's quite, I wouldn't say alarming. In fact, it's actually, from my perspective, kind of a good thing in today's market. That'll keep it balanced instead of swinging too far in one direction. And that's kind of what we're going to get into here. When you break it down, the balance is telling. Last week, 957 properties across Denver market went under contract. Meanwhile, only 1,200 new listings hit the market. Add to that 265 withdrawn, another 300 listings expired, and about 180 homes that fell out of contract and returned to active status. The result? Inventory actually declined slightly last week. Like the overall inventory, when you add all those numbers, decline. I will take that all day long. Guys, if we see inventory continue to rise at the levels it has been, that equates to or is a signal that the market's crashing. Let me explain that. Let me unpack that just real quick. More inventory without buyer demand pacing leads to a significant decrease in price. We can already see from the graph, this gap of inventory right here and this major increase led to a decrease in pricing. So the fact that inventory overall came down last week is a really positive and healthy sign from my perspective. Now, history says that inventory will continue to climb through fall months. That is still most likely the case. But if the pattern of fewer listing continues, interest rates continue to drop, driving more buyer activity, we may see less growth of inventory, a balance of the supply and demand equation a bit, and more stabilization of prices through year end. Love to hear that. I still believe this year will be the first year in a while we see a negative price curve. But if we can kind of cushion that a little bit, I think that's healthy. What I personally don't want to see is too significant of a price decline in 1 year. I'd much rather see a healthy balance from my perspective. And this is a good sign, guys, especially for the used sellers. Price reductions, days on market, and offer trends. Price reductions are becoming increasingly and predictably more common. As of June, 45% of sellers have already adjusted their asking price at least once. If history is any guide, more than 60% of listings will likely see a price reduction before the year's out. The average days on market has also crept just above 45 days, the highest we've seen this time of the year since 2012. And what we're seeing here, right here, is this listing days on market. When you put a sign in the yard to when you actually get a contract and sell, it's the highest amount of days that it's been since 2012. 2024 ended with an average marketing time of just under 70 days, and 2025 is well on pace to exceed that. Perhaps the clearest indicator of a buyer-friendly market is the percentage of homes selling below list price. By the end of June, over 66%, guys, 2/3 of the market of home sales closed below asking. If this trend continues, as it does each and every year, expect that figure to climb past 75% of homes selling below asking price by year end. So, what to expect in the months ahead? Over the next 6 months, well-prepared and properly priced homes will continue to sell, as they always do in any market. But sellers need to shed assumptions and embrace the current reality. Competition is most likely to grow and the margin for error has shrunk. Meaning, guys, the market's likely not to get better over the next 6 months for sellers. And so, have the assumption that, that's going to be the case. And that's going to set you guys up for success in today's market. Success now depends on strategic pricing, strong preparation, and clear expectations for navigating the market. Sellers who cling to past market conditions or emotional price points are likely to face extended marketing time, steep price reductions, and deep self-induced frustration. Days on market may push past 80, even 90 days by end of year. And even if interest rates drop, the inventory to demand ratio will still favor buyers, keeping downward, but maybe more stable pressure on prices. For buyers, including investors, this environment represents an uncommon window of opportunity. Rising inventory, declining prices, and potentially lower borrowing costs could make the next 60 to 120 days one of the most advantageous buying environments in over a decade. Preparation, timing, and decisiveness will be key. Guys, that is it for today's update. We covered the pricing trends for Denver. And let's go back to that just real quick. I want to show this. I want to give more light to this. So what you can see here is price per square foot by month. Okay. And I'm not too concerned about the left-hand side of the graph and the bottom. The bottom is just the weeks of the year, right? So when you start on this left side, it's January 1st, and you go all the way over to the right side, that's December. What we want to track and look at is the lines on the graph. Are we trending up in price, flat in price, or down in price? And how are we trending compared to previous years? Well, if you can see this kind of brownish line real quick. Yep. So this brown orangish line right here, week 25, 26 of the year, June, we're trending below 2021. I'm sorry, we're trending below 2022, 23, and 24 in pricing, and kind of have been for the past 10 weeks. We had a little surge in price here, but for the most part, guys, we're not trending great in terms of pricing, and we're falling below previous year's pricing, to where we're the lowest, at least as of last week, that we have been in 3 years. So that's where we're at price wise. So we've covered price. Is the Denver housing market cooling? Yeah, right. If you have a negative price curve like that, absolutely, the market is cooling. The real factors driving Denver's real estate, guys, a lot of this comes down, in fact, almost all of it comes down to supply and demand. We have a lot of supply, not as much demand, and because of that, prices are trending down. If we get a significant improvement in interest rates, we could see that supply and demand ratio shift. But even if rates continue to somewhat modestly improve, the amount of inventory we have in the market, we're likely to see more of a balanced market in the coming years. But if we see inventory keep taking off, buyer demand not keeping pace, prices will fall. If we see buyer demand increase because of great rates, and we should start to see inventory come down because we have more buyers in the market and prices tend to go up. And so Denver real estate market forecast for the next 6 months, I think the writing's on the wall based on what we just discussed. Pricing is likely to come down. Sellers, be prepared. It's more important than ever. And buyers, get ready to buy. You're going to have some really, really good opportunities here in the next 6 months. And guys, that is it for today's video. If you haven't already, be sure to like and subscribe. I have about 90% of you, 95% of you who join the channel aren't actually subscribed. So hitting that subscribe button will help us grow the channel more than you know. And we want to get this type of insight and information to you when the time is right. If you're looking to buy in 3 to 6 to 12 months, we want to equip you with the type of information that's really going to make a difference in your journey of purchasing a new home, whether you're relocating or you're here currently in Colorado and upgrading or buying your first home. The information in these videos is really going to help set you up for success. So with that, be sure to like, subscribe, and last but not least, my number is in the comments. Link down below is to schedule a call. We'd love nothing more to have these conversations with you and help you guys in your real estate journey. And guys, that is it for today. Thanks for joining. We'll catch you guys on the next.